weeks before it really starts to pull back. So you got to be careful. Also, apparently you guys couldn't hear my sound effect. So I'm going to play it again because Chandler or James, one of them, said that they couldn't hear it. So here's Ivan's hallelujah sound effect.
Ivan helped me see the light.
There you go. Ivan helped me see the light. I wanted to make sure everybody could hear that, because if you aren't seeing the light with the help of Ivan, then I don't know what you're doing. Speaking of which, Ivan does do coaching calls. Wow, that was a good segue. Ivan does coaching. If you're looking to see the light with Ivan, he does do one-on-one calls with traders who are looking to improve. He has a YouTube channel. We'll be dropping the link to that here in the chat. And if you would like to work with him one-on-one, he does offer coaching for a very, very affordable price. You can find it right here. And again, I highly recommend you consider it. If you're somebody who's struggling out there, don't just throw money in the markets. Get some education. It is worth preparing yourself. Otherwise, you're preparing to fail. Anyways, Ivan, thank you for coming on the show and helping us to see the light today.
Thank you very much for having me.
All right, man. See you next time. There goes Yen Man, guys. We'll miss him. He is Yen Man for a reason. He always wants to talk about the yen, which is totally fair, because I always want to talk about gold in the Nasdaq. So everybody's got their... Every trader, what you'll notice is if you watch the show for a little while, everybody's got their topic, except for our next guest, who literally just trades absolutely everything. He trades agricultural futures. He trades metals. He trades the Qs, the S&P 500. He trades options. He trades just a bit of everything. And I love it, because I think being more diverse in what you would trade, a lot of traders, when they get started, they hear everybody say, only trade one thing. But if you're a fundamentalist, which a lot of the traders that come on to our shows are, you know that markets don't move in isolation to each other. They move all connected to one another. If you have a bullish outlook on the S&P 500, guess what? You can take that perspective with you to other markets. You can look at, how the economy is performing, and you could say what you think about gold, what it might do next. Or you can take it to the Russell small cap index, which I've told you guys I'm really, I'm very heavily long on the Russell right now, and I think that has a lot of upside if we do see this whole soft landing play out. And if we don't see it, then maybe I'll go trade TLT, maybe I'll go trade bonds. The beauty of being a fundamentalist and using tools to help you be a fundamentalist is that you're not tied down to only trading one chart. And if there's no setups on that chart, you don't take trades for weeks, right? That's, the power of being a versatile trader who trades many different assets, because you use fundamentals to trade, not specifically one chart. The value there is that there's always a market to trade somewhere, and you can abuse that. You could take too many trades, don't get me wrong, but you can also basically say, look, there's money to be made in these many different charts. I'm here to make money. I'm not here to trade only gold. I'm not here to only trade the AUD USD, right? I can trade many of these different things. And when we built the Edge Finder, that was kind of our goal, was to help broaden our scope. Keep an eye on all of these markets, all from one singular terminal. If you guys would like to get access, remember the 35% off sale week just got kicked off. We're doing 35% off the Edge Finder. It is a one-time fee to get access to this tool, and it is currently really low price. So take advantage. If you don't already have it, you get access to the COT data, our put call ratio, which is a big popular one, seasonality. You've got our top setups algorithm, which helps you, as I just mentioned, it's the bird's eye view of all the different markets we watch. And again, start bettering your fundamentals. This is one of the better tools. In my opinion, I might be a little biased on this, but I think it's the best tool out there for spotting fundamental trends and keeping an eye on the macro, all from a singular, easy to understand terminal. Okay, so there you go. There's your pitch. Get 35% off using the link that just got dropped here in the chat. Now we're going to take a quick break, and then Chris Pulver is coming on the show to take over for a little bit, talk a little charts. And Chris, maybe he can share a little bit of thoughts on that concept of diversification and watching many markets, and what are the pros of watching so many markets. So Chris Pulver coming in just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey everybody, happy Monday. Welcome back. I was just trying to get a back test up and running here. I'll get to my charts in just a minute. We do have some interesting news this week. We have NVIDIA earnings with a couple other notables on Wednesday. We have core PCE, which is an inflation data point on Friday. As Nick mentioned, talking about diversification. Okay, let me switch up this back test. I think that DTE was way too tight. Let's go to 30 DTE here, and here. I think 30 DT is going to be the bee's knees. These deltas might be a little bit off, but let me run this again. So while that's running, here's my charts. I took a couple of trades this morning. I'm doing a little vol play on the SPY and the Qs. I did a September 6th expiration, which gets me out through this week with NVIDIA, with PCE. I know we have Labor Day coming on Monday. We come back to next week. We have non-farm payroll on Friday, the 6th, I believe. So I'm trying to go out and play a couple of weeks of volatility. It wasn't super expensive to do that, so I'm opting to go out one more week. And I paid $10.90 for a QQQ debit. I'm going to try to get, let's see if I can get like a 15, maybe a 15%er. So 15 times 10.90. I'm looking at about $1.63 per contract on the SPY side. Same type of thing. Give myself about $20 and $16 of profit one way or the other. Paid $8.60. If I pay $8.60, get after a 15% take profit. So 8.60 times 0.15. So $1.29 a contract or $1.63. Try to make a couple bucks this week. If we have a big move this week with NVIDIA, awesome. There we go. So going out 30 days, this looks a little bit better. That's totally fine. I had some interesting tests this last week. If I go back here, some pretty good P&L on some of the strategies that I run, some of my core strategies in here. I'll just show you these. So P&L curves look pretty solid. And what I did is I just went back to take trades where SPX started trading Mondays and Wednesdays and Fridays. And then as of like summer of 2022 was able to get 0 DTE. So I did a lot of trading on 0 DTE. I actually shared this with the Tasty Trade team. I emailed Tom Sosnoff this weekend and just sent him. It's like I went back to, the win percentage is ridiculous. A 97% win rate. It's about the consistency of taking the trade, each and every day. So I think that's pretty sweet. And it was like, 600 trades. So I'll keep an eye on this today for SPX, watching this closely. I centered this around 56.40, 56.45 this morning. We'll see if there's a little chop suey going on. If we come back to 56.40, I should be able to grab a couple bucks this morning. And I think that's fine by me. I'm looking at some gamma levels this morning. Here's the Qs. Nothing really stands out outside of this initial move, just kind of already happened. We've got this is a 476 strike, and we have a 480 strike. I just picked you up, dude. What's your deal? What's your deal? All right. The dog wants to say hi. So we're getting a little bit of a sell-off on the Qs today. Put ratio is bigger than the call option ratio. So we've got 66-6. So it's certainly balanced more to the downside. Let's go back a little bit to a bigger time frame. There's a lot of indecision here at the highs, right? So, we're not at all-time highs yet. We're nowhere close to them on the Qs. We are a little bit closer on the SPX. This level is going to be important to watch. I could see some indecision, most of this week. So if we just kind of bounce around today, make some sense. We don't really have a major catalyst until Wednesday, but I'm just watching that in the higher time frame, 5-minute charts where I'm looking at some intraday price action here. Let me go for, is this one filling up here? 267. So let me look at something. I'm going to put in, I'm going to grab this on another application. So if I put in QQQ, let me see. If I went out to today, I mean, I'm only going like a 60, 70 cents lower. I don't love that trade. Let me see if for a Monday, maybe I can grab like a bull put spread this morning. If we get down to like 475, let me see what this would be on NDX. Actually, QQQ be fine. Let me see what like a 475 bull put spread looks like. QQQ for today, 475. Grab 25 cents out of that this morning. Probability profit 67%. It's a little tight. Just seeing if I can find a trade that I like. On the SPX, if we can have a little high, a little low, a little indecision for the morning, that would be fine. Let me zoom out of this chart. This would be a little bit easier to see on a 15-minute chart. So my outlook right now on the index would be, we have highs sitting right here. We're very close to them, obviously. The major catalyst this week would be NVIDIA, something like this. So, you know, I highlighted some notables, some companies I may take some earnings on. I might look at CrowdStrike, Salesforce, NVIDIA this week, possibly price out some earnings, maybe for a Friday expiration, maybe for next week. But this is where I think most of the, you know, the volume is going to come in, would be like Wednesday, Thursday. Heavier in the earnings side. We only have 124 companies reporting earnings, but most of them are going to be on Wednesday and Thursday. And then we have Core PC on Friday to finish up the week. We're going into a holiday weekend, by the way. So volume might be a little bit lighter outside of those major catalysts. I mean, Friday's Core PCE, but Monday's a holiday. I could see markets being a little bit thinner, which is either one, a perfect time to not move at all, or a perfect time to make big, like low volume, kind of catch everyone off guard. Like sometimes I say this where the market moves like nobody's watching. And it's like, man, it's a holiday weekend, and yet the market's doing something silly and crazy, right? That can happen. So anyway, I'll go back to the point of Nick talking about diversification. I mean, I'll just show you what it looks like. So here's a little glance at the portfolio. These are all the instruments that I have trading. So it's a lot. I mean, I've got oil. I have E-mini futures for the S&P. I've got gold futures. I've got copper futures, Nasdaq futures, Russell futures, silver futures. I have Alcoa. I have American Airlines. I've got Apple. I've got Abbott Labs. I've got Amazon, Alibaba, Baidu, some Bitcoin, some aluminum plays, Chewy with dogs. It's like the Amazon for pet food and dog toys. Cisco for some tech. EWZ is Brazil. Ford automaker. I've got some China exposure. Some Mag 7 with Google. A couple of things there. That's just out of the money stuff. What else? Russell, Airlines, MicroStrategy. I'm going to have to do a roll here on MO. This thing is ripping to the upside. I've got it covered at $50, which, I mean, reality wise, I'm up $83,000 on MO. I don't really have to do anything, but I'm trying to gather an extra $950 for dividends. I just want this to be a nice little dividend stock, but I don't mind just taking the gains. So I think, I don't know, it's going to cost me to roll this, so I just have to go back and take a look. But if I get it called away, I get partial shares called away at $52.50 and partial at $50, which is still a heck of a gain. I mean, I own the shares at like 39. It's gone up a ton, and I've pulled in, you know, 2/4 of dividends so far. Anyway, but it's all over the place, and this is probably crazy confusing. It's like, how do you track all this stuff? I mean, it's just the trades just kind of add up. I mean, I'm active in the portfolio, and I find a good trade, I'll take a little trade. I mean, I'm usually I trade a lot and I trade small, and that's what tends to add up to a lot of wins. So, I mean, for me, when I trade, it's not about having, and this could be different. I mean, it's not for everybody, but for me, I look at it this way. If this is where I want to get to, okay, if this is where I'm starting, so we'll say I'm starting here. So this is my starting point, and then this will be my finish line. I'll draw it as best as I can. So we'll start here, and we'll finish here. This will be my checkered flag. Okay. How do I get there? Well, if I have a bunch of small wins, it just adds up. And the nice thing about a bunch of small wins with diversification is I can diversify away a lot of the outlier risk. And so if I just keep taking trades mechanically with, 10, 15, 20% take profits, 10, 15, 20% take profits, it's just active management. And I get there and I don't really have any crazy exposure, concentration, or outlier risk. You can see the dangers of that. Like what happened on August, 1st, 2nd, and 5th. That's outlier risk. That is concentration risk. That is, if you had something that was affected by that move, you can see how potentially damaging that is. So if you're diversified where that move doesn't necessarily affect, or you've got hedges to protect it. I mean, if I have a core position and I own a share, I might have it covered up here and also have it protected down here. So if price goes up, I can get it called away for premiums. If price goes down, I'm protected to lower my cost basis. And so I'm kind of always playing defense with my core positions. Okay. So all right. Anyway, that's just a little bit of discussion there. Let's talk top down for a second. So if I look at the SPX, we are sitting here, like I said, near all-time highs. If we roll on to the right side of this trend line, this doesn't necessarily mean that we have to go down. But I do think what's in the cards with this sell-off and this recovery, it would make some sense to me that the markets could pull back a little bit. I think the markets could pull back just a tiny bit. Let me see here. I'm going to go long the Qs for a second. So if I go single 0 DTE, let's go 476. Okay. If we go sideways, make some sense. I truly think that I'd like to see this, because we had a V bottom right here and we recovered and actually took that out. That doesn't happen very often as fast as this happened, but it certainly happened. The last time we had a V bottom this aggressive would have been probably 2020. That was a crazy aggressive V bottom. Like within a month cycle from like February to March, we had a 30-40% sell off and then a rip to the upside. That was crazy how within like 1 or 2 months this thing was back to those highs and that V bottom was pretty much toast. So we had a similar movement right here. So because of this high, I see some left structure where if the market just kind of rolls over this trend line, pulls back a little bit, this 5,500 zone in the SPX, or maybe down to the same lows here around 5,400, I'm interested in looking to buy those levels and try to go after destination 6,000 to get through some of the noise. Now, we may see something more volatile. If I zoom out just a little bit, we might see, and I mentioned this in a couple of videos the last few weeks. Do we have something like this where we have higher lows, lower highs, and we're going to deal with a lot of indecision, over the coming months, and maybe that indecision comes with a lot of volatility. I don't know. But given how this was, oh my gosh, we're in a recession, to oh my gosh, we're not even close, and the Fed's going to handle everything, we're getting rate cuts and employment looks better, crazy sentiment shift. So to me, the market is a little bit better postured for more upside. I think that there's, we have lots of fiscal stimulus. We have now an accommodative Fed. Inflation data is improving, is trending lower. I know employment's a little bit sensitive and the market's going to continue to digest that. But I'd like to see a pullback into these areas and then look to go long and kind of stay long for the rest of the year. If we're going to have a good Q4, I would not mind at all getting some exposure here, having some tight stop losses and going after maybe a 9 to 10% upside. So that's roughly what it would be versus, maybe taking a 0.5 to 1% stop. So I think there's good asymmetry there. If we pull back to 55 or 5,400, take a look at the NDX and see the same type of thing. So this one, we're a little bit further away from the highs. but we did at the same time take out that August 1st high. So if we pull back into this area, that's around 18.8. If we go sideways, fine, right? Or if we pull back a little bit, see if this is a high or low, and then the market starts to make runs to all-time highs. So again, I like this zone. I'm going to put in let me put a horizontal line in here. So if we look at this area for some support, I'll put this over here. That's fine to keep it on both sides. So I'm looking for some horizontal support between around 18.8 and maybe 18.4. So somewhere in this area, probably just putting on some simple credit spreads, have some defined risk, go out 30 to 45 days, and then see if this market wants to make a run, let's say late September, early to mid-October, trying to get into a strong Q4 to finish out the year. Where do we finish? Maybe the Nasdaq finishes at all-time highs. But if we're having a SPX move upside or SPY upside or Qs or NDX upside, this is what Nick and I talked about last week with trying to get the Russell to play catch up and possibly get to all-time highs by the end of the year. Hopefully that is the case. Okay, so those will be areas that I'm watching for potential support. If we go into the Dow, so is this true? Did the Dow just make an all-time high? Are you flipping kidding me, man? Well, there you go. So the Dow looks like today just made an all-time high. Congratulations, index. And I'd like to see maybe a pullback into this zone here. So, and maybe I get one, maybe I don't. But if we see price after again, this high from August 1st, this sell-off, the V bottom has been taken out. And now we look to see if this high matters. Does it come up here, consolidate a little bit, and then look for a breakout to the upside? Now, today's breakout is not what I'm looking at for a breakout. I'm not interested in that as a breakout. I'm saying more, I want to see a little bit more accumulation. So either we pull back to equal lows from last week, Thursday, or we pull back into this structure here, which would put me on the DIA around 404 to, let's say, 400, and look for some opportunities to go long. And does that long get us back to all-time highs? I mean, if this is going to be a bullish pattern, we pull back into this right structure, we push up here, we make a break for it. There's still measure moves to the upside. If SPX or SPY, if the SPY gets to 600 or the SPX gets to 6,000, I mean, we'd probably be talking about the Dow at maybe, I don't know, 42,000, 43,000. So maybe that puts us up here towards like 420 to 425. But if we're buying this thing at 400, that's a pretty good upside, right? So that's where I'm looking at prices right now. Okay. Russell, we are not at all-time highs. We're in fact quite a ways off of all-time highs. Here is the RUT. We gapped higher on the RUT. RTY is going to be your futures feed. And Russell futures looking better. The all-time highs back here in late 2021 when tech started to deleverage. That was the last time we saw the all-time highs in the Russell. So it still has a little bit of room. The nice thing about the Russell is we are making higher lows for right now, and hopefully it will continue to stay on that course, which is, even if it's choppy and volatile, if we make these highs, look, if we get back to these highs, I'm not saying I need to go too much higher than that, but if we get there, that's an awesome target to be trading towards, and I'll probably be protecting most of my profit there. But I had some profits last week on the RUT at 2050 and 2100. That'll be out today, this week on the 30th. So Russell's still looking good for some short-term profit over the next couple of weeks. Volatility index, we're at 1622. We're a little bit more elevated from where we had that volatility event in late July or August really, but it started in mid-July. We're still a little bit elevated. I do wonder if there's another move up on volatility into the 20s. If that's the case, what does it look like as far as the sell-off goes? I don't know if we have. I hope this isn't the case, but I would hope that there's not another one of these. Right? If we have another volatility event, then clearly this market is crazy risky. I don't think that's going to be the case, but if that is the case, that's a huge red flag for just trading, short-term. Well, I guess it's a red flag for any type of crazy silly outlier. If you have naked puts or naked puts and futures, especially, that's where things get really messy. So I don't think that's going to happen. But I do wonder if we're just, after one of the biggest volatility moves in 35 years to one of the biggest volatility crushes in 35 years, if we just say a little bit more elevated here, maybe 15 to 20. Okay, this is considered medium volatility if we're in a 15 to 20 VIX. I'm still holding long SVXY. Dollar index, I want to spend some time talking about. I know a lot of traders have been short, and that's awesome. I hope you made a ton of money being short the dollar. If you did, great. I know it wasn't the easiest trade other than maybe trading pound dollar, euro dollar, because those have been the ones that have been making euro dollars made higher highs, higher lows. Pound dollars made higher highs, higher lows. Aussie dollar was all over the place. Dollar CAD all over the place. New Zealand dollar was choppy. So it wasn't necessarily a fair move just to see that, oh, this was easy, just a trend in the dollar since June. Not every currency pair stacked up the same way. But if we look left on this chart, dollar index has a lot of support back here for the last couple of years, sitting at this 101 point level. So I could see the dollar in the near term making a pullback. Okay, if it does make a pullback, there are certainly levels to sell. If we make a pullback to 102 or 103, 102 sell, or a 102.50 to 103 sell, and that stop loss would be pretty tight. If we're right and this is like dollar weakness, pullback, more dollar weakness, there's a lot of opportunity here and some open space to get into maybe 100 or lower. If the dollar index cracks below 100, there's room down to like 96 or 95. And I've said this now for months and pretty much all year. If we're going to see a higher stock market, I assume that the dollar is going to have to get a lot weaker. And why is the market making such a drastic move against the dollar? Because for the first time in a long time, the jawboning that the Fed gets away with, which is saying we're thinking of cutting rates, we're thinking of cutting rates, we're thinking of cutting rates. The market hasn't moved on the dollar because other central banks were cutting rates before, right? The Fed is like the last bank standing to now officially cut rates in September, which is high probability that they will. And then once they start cutting, they typically just cut and stop. They cut and they continue to cut, and it's going to be a cut cycle. My one concern, and we talked about this last week, I sent a video out, I think on Friday after market close. Let me see if I put in, it's in one of my workspaces here. Where is it at? Oh, I think I actually put a real label on it. Where's it at? Oh, Fed rate and index. Yeah, this one. So this is the rate cut cycle on the bottom. So this is the official Fed funds rate versus the Russell, the S&P, and the Nasdaq. And the one thing I made a video on was the only time that we've seen in the last, let's say, 30 years, the only time that we've seen a cut cycle be beneficial to the markets has been 1998. 1998, we had a cut cycle start, and the markets continued to rip to the upside. So we cut right here, and the Russell's up, the SPX is up, the Nasdaq is up in a big way. But all that did was fuel an asset bubble that ended up bursting in 2000, 2001. Okay. The next time we had a cut cycle, it didn't matter. The cut cycle started again here, and the Russell was sideways, the SPX was down, the NDX was down in a big way. The next time we had a cut cycle, we were here all the way in 2007, 2008. I don't think I knew explain what happened there, but we started a cut cycle, Russell down, SPX down, NASDAQ down in a big way. Okay, cut cycle here. Started to cut, crash, crash, crash. Here we are right now. So other than this 1998 example, when we still had some, late inning expansion before we had an asset bubble in 2000, 2001, that might be pretty similar to where we are right now. Might be. Okay. So I'm not saying that this is going to be a repeat of 2000, 2001. I think, banks are healthier, households are healthier. I think, tech in general, and there's more circuit breakers in the market. It's a different market. It evolves. It always will. But as we get to these pretty lofty valuations, I think the healthy thing right now is that we have to have a bull market that's spread out, equal weighted, so to speak, as opposed to like super concentrated. But as we're sitting here near these ridiculous highs, and there might still be some more left, but if we start a cut cycle, I don't know how this continues to go bananas to the upside. Or if it does go bananas, something tells me that what we've been looking at is we've had some aggressive downturns and some rips, some aggressive downturns, some rips, some aggressive downturns and some rips. Something tells me this market is just going to keep happening with like these booms and busts. and it's just a matter of how we can survive them. You know. So that being said, that's where I'm at right now. Let me see here. I'm going to go out to 470, 480. I'm going to put on a couple more trades. Just give me a second. So that's dollar. I mean, I know I left off on dollar index, but how it all kind of wraps together is the Fed has gotten a lot of free mileage out of talking. Okay. And when the Fed talks, the market listens. You know, I mean, right now, the market cap for the US is like 60% of the entire global economy. You know, GDP wise, it's like we're right up there with China. I think China and the US probably add up to 50 to 60+% of total global GDP. I mean, so there's a lot riding on the world number one, world number two. And China's been this like sleeping dragon that won't wake up and add any stimulus. And it's kind of all been leaning on the US to like save the global economy. Well, if the US is going to start slowing down, I mean, we're not there yet. I listened to a lot of content this weekend. We're not there yet. We have to see some look, price is going to lead, right? Stock market price is going to lead, but we're going to have to see way higher ticks in unemployment. I know we've seen a slight trend higher, but we're going to have to see way worse job numbers than we've already been seeing. Like the trend's going to have to get like terrible, right? We'd have to have like huge whiffs on non-farm. We'd have to basically have, I'd say one thing that'd be scary about the non-farm would be if we have a number. Let's go to Friday the 6th, for example. I don't think there's a forecast or anything. But Friday the 6th for non-farm payroll, if this number comes in negative, right? Like let's say that they're forecasting 200,000 jobs and it comes in negative 100,000. It'd be something like that. That would really scare the markets. But we have had, if we look at the numbers here, yes, we had a whiff in July, right? The first print for August was a terrible July jobs number at 114. That's COVID. That's here. Let me go there. That's a little bit better. Okay. So forecast was, 175 came in 114. We're looking a little bit softer, but look, we've had steady and positive job prints, right? Give me a sec here. 474. So 480. Give me another gamma level, would you? 480. Hang on a second. Uh, 470. Okay, just give me a second here. All right. SPX is 21 and I am at, hang on a second. I just have to check my numbers here. 45. So my downside's 15. All right, SPX, don't be a turd on me. Okay. So let's do. I'm gonna go. Sorry, I'm just throwing in another trade. I'm gonna go out to a 1 day. And what's an at the money Qs right here? All right. So dollar down, Fed down, stock market, I think hinges on a weaker dollar. If we go to all-time highs, dollar's going to get weaker. So going back to the trade here, I'll take some currencies after this if anybody's interested. Oil had a big pop to the upside. Yes. Gold we're still watching. Silver still watching. I heard Alvin talking about it earlier. If we get a pullback on dollar, it makes sense technically. We've had about 7 weeks of downside move in the dollar. But again, if you're a trend follower, the dollar's going to have to prove a lot of bullishness, and I don't think it's capable of doing that right now. I think this is the easier trend. Risk on trading, especially, is gonna favor a weaker dollar. So if we have any type of pullback, I would look to fade that dollar and see if, I mean, ideally, if you can fade the dollar down to 100, I'd like to kind of get that trade. If we get like a 102 pullback and then fade it down to 100, get a stop loss and a break even or better, and then see if this thing actually goes a lot more aggressively through the lows. Because if it breaches 100, there's a lot of open space at the downside. I've got symmetry measured to like 94 on this dollar index. And I mean, I kind of love that spot. So, I mean, even if we hit this like 18127 extension, that puts, dollar index around 9827 or 9700. So, I mean, that's pretty conservative, right? We could have this wave 1, pullback, push to wave 3, pullback here, and then finish the move all the way down to the 1618. But we could still have a 5th wave structure after this indecision. So any type of pullback on the dollar, as long as we're, I see we have to still be below. We'd have to be below 104, 103 to 104. That's definitely my stop area for the dollar if I'm going to stay bearish. Okay. So my trade, let me check on my SPX trade really quickly. So today, SPX. What? Yeah, that's not right. Okay. So we're threatening the put side. I could try to do a quick roll on my call. I'm trading for like $8 right now. I'm going to stay out of this trade here. Let me see if I can roll my calls down. So SPX put side is threatened my call side. Can I roll these down really quickly? Quick roll. So 56.55. 56.55 would be all the way back up towards highs today. I should definitely be able to roll that down. So $3 and change for that roll. Let me see if I can roll this. I don't want to roll the whole thing. I just want to roll the call side. There we go. So 356.50. Oops. So I need to close this. And then rolling all my calls. Oh, I don't want to roll this out to tomorrow. No where I'm getting that credit. Hang on. There we go. Sorry, this gets a little messy. I'm looking at rolling a 0 DT, which is rare to have to do that, but I'm watching that. So just on the call side, 1, 2, quick roll. If I roll this, I don't want the expiration to change. My initial legs, 56.80 and the 57.05. So I'd roll this strike wise. You're way off. What the heck, man? I don't think there's much I can do here. I can get some credit for it. Roll it back up towards 56.50. Maybe this market somehow surprises me and comes back to profit. I need to get back to like 56.30. If I get back to like 56.30, 56.40, this trade will be okay. But I'm starting to notice that, we're filling in some gamma levels here on the real time. I mean, we've got this 56.50, which is where we started. If these start to light up and get bigger to the downside, then there's certainly a lot more pressure to retest, gap and support from last week. This is Friday last week. And then this is so far today. Thursday was a big sell-off day last week. So just kind of watching everything intraday. But I'm trying to see if I can roll a 50. What was the trade that I took here? 56.80 by 57.05 was my call side. So 56.80. Sorry, I just need to take care of this trade here. So I'm going to try to roll my calls and roll these up. I don't want to roll it out to tomorrow. I don't care about tomorrow with a 0 DT trade. So I need to change the expiration. This is what makes it a little bit sloppier. So put it on the 16th. The 80. The 56.80. I'm going to roll down, let's say, to like 56.50 and then go 25 points wide. So there. So I could roll that for $1.50 credit. Maybe go a little bit safer here. 56.50, that would be all the way back to the highs again. I think that's pretty safe. I'm going to try to roll this for $1.50. Try to get $1.45 at the mid price. Come on, you turd. Fill it $1.35. Okay, so I rolled that. Rolled. Call side down for 0 DTE for $1.35. So max credit would be 4.35. And if this is trading for less than 4.35, I'll just get out of the trade. So I'll keep an eye on this one. So I now have 1, 2, 3, 4 close. I'll keep an eye on this one to see if we come back below 4.35 or better to get a break-even trade. All right. Sorry, that was a little high maintenance on a 0 DTE. Okay, I'm not going to go same credit. I'm not going to go same strikes because I'm doing a 0 DT. So I got to go closer to price. If I roll it out a day, that's not a problem, but I don't want to carry a 0 DT to tomorrow because it throws off the centeredness of my trade. But I'll keep an eye on that one, see if I can just mitigate some of the risk. All right, let's take a look. So we're good on the dollar. Let me take some currency pair requests. If we go dollar index, Aussie dollar, right back up to the top of this range. So I could see, same thing on the dollar. If the dollar turns and shows some support, Aussie dollar hits this pretty obvious resistance, right? And if we hit here, I mean, there's a good spot to sell high with a tight stop loss. If we get any dollar strength, it's a very small risk. Otherwise, the dollar would be, getting weaker, and Aussie dollar breaks up here, and then we look for more open space. I mean, I think that if we give the Aussie dollar a chance to get some open space, this is an easier trade to confirm it. I just hate the fact that we had a flash crash low, a rip to this wedge to the upside. I think this would be some accumulation before the dollar gets weaker or the Aussie gets stronger. Okay, so that's what I'm looking at there. Euro dollar has been making higher highs and higher lows. We're in some open space, but I could certainly see we had a break, retest, and a rip to the upside. Took out this high, challenging this high. A little, maybe a little drift or overbought, or maybe a little pullback first. But if you're already long euro dollar, I'd be trapping profits. I wouldn't be taking fresh trades on this one right now. Pound dollar, I was looking for the 131 handle. We didn't really hold at the 131.50 zone like I thought. We're above that now. So now that this has made a fresh break, you can see how many daily candles in a row we've had. If we pull back on the pound dollar, it would be something like this. We pull back here, maybe push higher. Pull back here, maybe push higher. but I just wait for a good technical setup on these dollar crosses. Okay, New Zealand dollar, same thing, a lot of resistance. I've said this for the last couple of months. If we get open space on the New Zealand dollar, I really like this trade to the upside. You know, getting to 67, 6,800, I like that trade a lot on the New Zealand dollar. Dollar CAD, oh my gosh, you freaking turd. Well, I've got a pending swing trade on the dollar CAD, but it's not giving me the fill. So now that we've taken out these lows, high, low, I'm looking for a pullback to then sell this thing again, but I'm going to wait. I mean, I'm still going to sell it here at 37.80. The downside was I was hoping we'd have a swing, take out the lows, pull back first, and then give me a chance to get into that trade with a couple of backside of the trend line rejections. So fudge, man, that thing has just dropped like a rock. It's almost 39.50 down to 34.50. That's a 500 pip drop on the dollar CAD. So I mean, this is still a big range trade. If we come all the way back down to these lows, I mean, to me, there's going to be a pullback. It's either like a pause or a pullback. But if this dollar gets weaker and oil goes higher, I mean, there's a great spot here at 32 or 31. I will buy the dollar CAD all the way back down here and just continue to trade this multi-year range. So I want a swing to sell. If I don't get the entries that I have pending, then I'll just wait to buy it between 32, 31, and 3,000 and just trade the range. So, I mean, BOC, Canadian economy, oil, yes, but like I don't think the dollar is getting so much weaker that the BOC is, going to hold rates above and all of a sudden be a positive swap over the dollar. They're going to cut alongside the US dollar as well. But I don't know. If we get to 32, 31, or 3,000, I'm buying dollar CAD. I just hope I get a swing trade to keep selling this thing. Dollar Swiss, are we coming back into this flash crash lows or the this December 2023 holiday pivot low? To either hold support. This is like a 10-year range right now, and I was looking to see if this is a potential, bullish pattern with a crazy deep right shoulder, or there is the chance that this may set up for some type of like larger range like so and some type of falling wedge. But I'm just gonna be patient on dollar Swiss. I'm not chasing dollar Swiss. I'm not chasing dollar yen either. It looks like the yen is stronger than it is. Because the dollar is weaker, but the yen is still not doing impressive things to other currency pairs. Aussie yen has barely moved. New Zealand yen has barely moved, right? Like these pullbacks are super minor. Pound yen's actually sideways as well. Euro yen sideways as well. So the dollar is really doing most of the heavy lifting as far as weakness. Swiss yen is also really choppy. So the yen is just kind of like sideways, but the dollar has been weak, and that's been the one basket that's been pretty active through the summer. Through July, June, July, August, the dollar's been hit pretty hard. But as I've said many times, the August month is usually like a high-low month or transition month in Forex trading. Okay, I saw some requests for gold, silver, and oil. We'll take a look at those. Here's gold. Actually, let's go oil first. So oil's made a nice rip. I'm not interested in the near term range. Like we have some 72.50 low, $72 lows. But in here, I'm buying oil at like 68 or 65, trying to stay out of the way. I will sell oil high. I will buy oil low. I'm not trying to stay in the chop. I think it's potentially volatile. We got Middle East tensions. We got all sorts of demand concerns, and it's all sorts of issues. So I'm just trying to buy it in obvious spots. Buy it low, sell it high, leave it alone from there. Gold continues to look good. I'm just kind of giving traders a warning. Expect a pullback though. I mean, if we break higher, awesome. But if we break higher, expect the pullback to still look for opportunities to get long. I still like gold to the upside. If we pull back, we have trendline support, looking for trendline support before we get long again. So I'm not discouraging anybody from, taking a position now, but it's clearly, this range means very little to the bigger picture of gold. I think if you look out 6 months or 12 months, we'll be having a conversation about how gold got to 3,000, right? But in the interim, if we dip to 2270 or 2300, that's going to flush out a lot of traders that are crazy long and crazy leveraged. When the reality is just look at the bigger time frame. Okay, so that's gold. Gold futures, I've got an expiration tomorrow on gold futures for some profit. Here's silver. Silver I like a lot better. I think silver looks great for some accumulation in here and some consolidation, and then see if we get a fresh breakout and looking long to 35 or higher. Trying to go 35 plus on silver. There's still really strong support around 26. Okay, silver futures expirations tomorrow. I'm up like $5,000 on silver right now. Bitcoin hanging in there, hitting the backside of this trend line. Look, I think Bitcoin gets also pretty exciting by the end of the year. If we have a breakout above 72, 73, we're talking about maybe a run to all-time highs, maybe a run to 100,000. But until then, lower highs, lower lows, backside of the trend line. I'm just putting a little bit of a warning sign, like, yeah, this might not break highs yet. This might be more, sideways here, maybe more accumulation. All this pullback zone is playing out. But if where do I get in Bitcoin? Well, if we come back down to this level here, I'll probably throw in a little bit more, but not a ton, because I would expect from this high, the average pullback on Bitcoin is around 70%. So if we just keep that number in mind, if we go from this high all the way down, 70% does not look good, right? I think this is going to discourage a lot more speculators if you're at a 70% pullback where Bitcoin's back to 22,000 again. That's not saying that it is going to happen, but it certainly can happen. But I would hope the 70% pullback is more so because we ran up to 150 to 200K and then pulled back 70%. Then we're revisiting, 50, 60, $70,000. But until then, I just see that this is an accumulation range. But if we get a break to the upside, this is where I would be willing to jump on board for some big potential gains. Otherwise, just stay patient, keep your eye on things, dollar cost average, stuff like that. Okay, I did silver, I did oil. Ethereum, if we get above this level at 2850, we had this little flash crash move. This is a V bottom, and Ethereum can get on the right side of this trend line, get above that support level. I'd like to see it above 2,800. If that's the case, then we might make a rip back up into here. This could be a nice setup for a bigger swing, using the same level of support over around 2,800, and then see if Ethereum can get back to these highs. All-time highs is around 4,800, so we're not there yet. Not there yet, but close. And then I'm in copper as well for some long trades. I'm way down here at 3.2. I'm long. I'm just trying to stay pretty safe. Otherwise, just watching. Okay. I saw Euro New Zealand, Pound Aussie. Sure, I'll take a look at those, and then I'll start wrapping a few things up. So Euro New Zealand, I do have a pending sell. I'm looking for a swing trade here. If we can get a pullback, I'm looking for a swing trade. If this goes lower without me, then I'll cancel my order. So this was a bit of a topping pattern. We had that flash crash move on the 5th, but it is proceeding lower. I just missed the entry, by the way, by like 5 pips. That was a little disappointing, but I'll still wait to see if there's a pullback into here or a pullback that's maybe equal highs and try to get that thing filled. I did adjust this. So initially I had a trade around 8,400 and we hit 83.93. So I adjusted my trade to 83.90 in case we have an equal high. So I still like Euro New Zealand to the downside. If you're following any type of trend system, looking for some entries to stay bearish for right now to see if this thing just retreats. Goes from a flash crash high, puts in a top, and then comes back into range lows at maybe 75. Pound Aussie, it's similar. Pound Aussie, I'm looking for a pullback. We're getting a pullback here. I've got a swing from this high to this low. We pull back into like the 50 to 618 zone. I like a sell trade there. Stop loss above the swing. Try to get back to the lows at target 1 or a push into symmetry, target 2 to finish the extension move around target 3. So I'd sell it here for risk, and then that's my reward is maybe a 1.5 to 1 or a 2 to 1 for just a swing trade. So I could take a 0.5% risk there, 1% risk there, go after a swing on Pound Aussie, and just it's pretty straightforward. Okay. All right. Any other charts? Any other questions? So covered the dollar, covered the yen, took some requests on Forex. Individual stocks. Let's take a look at NVIDIA really quickly. That's earnings on Wednesday. Okay. NVIDIA is down on the day, but pretty choppy. Actually, if you don't mind, let me price in something on NVIDIA right now. So the day has already moved a little bit. We've had a high at 131, low at 124. The average weekly move is about $14, which is interesting. That's the same size as the SPY right now. Let me price out something on NVIDIA. Let's make sure we have some earnings here. So let's go option slam. Where did my charts go? Here. Okay, so if I move this over, so NVIDIA, if we go to the average move is 9.9, we have 7.5, 8.75, 8, 5.5, 7, 12, 13, almost 14, 14. 9.9 on average, but over the last, I'd say the last year, NVIDIA earnings have become, certainly more of a mover. I don't know. I mean, the average is 9.9. I'm going to stick to the numbers here for the last 10 earnings. This actually is probably over like 30 or 40 earnings. This might show the average over 93 earnings actually. But way more volatility since like, early 2023. So 9.9 seems pretty safe. The only issue that I see is about a 9.9% move on $126 position. You're not looking for this monster move, right? If I go 0.099 times 126.42, we're only looking at about a $12 move on NVIDIA. Okay, so this may not be an expensive trade, which means I don't mind taking it. So let me take a look with NVIDIA earnings on Wednesday. It's Wednesday aftermarket, so I'd only have to manage this Thursday, Friday, or I go out for another week and bring in another week of volatility. Let's go to a post earnings move and see how many times we get to 10%. So within, if I usually have a hard stop at like 8 days. So we go from 7% to 80%. I think that's because of the split. So that's not really accurate. This one I'm going to say we almost got there within 9% within day one, but that was the split. So I can't really count that one. But this one I need 9.9. We get it. So let me put the hard cutoff here. So this one does. This one does not. This one does not. Oh, sorry. This one does not. This one does. This one does. This one does not. This one on day 8 gets to 19, but it takes that entire time. I don't love that one. This one does. And this one does. So we have 1, 2, 3, 4, 5. This one, because of the split, I'm gonna say that one doesn't count. So we have 4 no's and 5 yeses. It's obviously a super highly anticipated move with earnings this week. I'm just gonna price it out. Maybe I take a credit spread and make it very cost effective, or maybe I look at a reverse iron condor. So let me price it out. I think going out to this Friday is a little bit too short term. I'm going to go out to the 6th and bring in a little bit more volatility. If I were to buy, we're at 126.50. If I buy the 127, buy the 126, this is showing an IV of 79 with an implied mover on $16.50. So if I sell 27 to 47 and I sell 26 to 06, okay, so for a $20 upside, I'm paying $12.41. Not that that's a bad trade. Now I'm paying $12.41 for an expected move of 15 or 16. I mean, the reality is I can probably turn this into a $2 or $3 profit. Now I could probably bump this up a little bit more if I do 127 to, let's say, 152. What is that? 120. That's $23, and then go from 26 to 03. So now I pay $13 for a $23 move, which gives me about a max profit of $1,000 for a 13.23 risk. It's probably cheaper to play it cost effectively, which means if we have an expected dollar move around 16, I'm just going to go up $15 and just do an in the money credit spread. So we're at 127 right now. Let's go up to 142. Okay. And I can get 80 cents on a credit spread, which is super low risk. And then to the downside, I'll go $15, and that'd be 127 down to 112. So out of a max dollar spread, I'm gonna see if I can get $1.50. So can I get in for? See, I mean, it's the spread's only $1, which makes this really cost effective. I do have a risk of assignment, but I'll obviously, cancel one side of the trade. I'm not interested in taking any shares of NVIDIA. But what this would mean is if price goes up or down, if price goes up towards the expected move, I can take this $1.50 credit and probably turn this into, on one side of the trade, I'm going to win about 80 cents. On the other side, I'm going to lose about 20 cents. So I'll walk away with like 60 cents net profit if one side or the other, is hit. So if I can at least maintain $1.50, that's actually good. That's a very low risk trade. The question is, how many contracts do I want? If I hit a profit target here, 15% of $1.50. I'm only making freaking 22 cents if I want to manage this thing early. Spreads are not super wide, which is good. But let me see here. If I did, I'm going to go 3 contracts. Try to get filled for $1.50. That was easy. I got filled for $1.50. Okay. So they're only $1 spread. I'm going to get filled. So let me do this for all 3. 9732. Okay. Hang on a second. That one's pending. $1.49 fill. Okay, good. All right. So what this trade looks like is the following. This is a tracker here. Let's go NVIDIA. Earnings play. In the money credit spread. So I'm doing the 9/6 expiration and the 142 by 141 bull put spread, and then the 112 by 113 bear call spread, $1.50 credit. So on one side, I collected about 75 cents on each one. So the way this trade would work would be if I win on one side, if I let it go all the way to expiration and price is above or below those credit spreads, my winning trade is 75 cents and my losing trade is 25 cents, give or take. So if I walk away with a net 50 cents and I have 3 contracts, then I make 150 bucks. That's where it's at. So, I mean, if it works, awesome. If I get assigned early, then I'll manage the trade. But I need price to see if we get above 142. So I'll go ahead and move this. So 142. And then down here towards 112. So I basically just, is it 112? Yeah. So I'm looking like for a $15 move. So in the money, credit spreads, $15 away from center price Monday. Okay, more net credit to compute to get more payoff. Well, I went in the money, yes. So Iron Condor, Iron Condor. So the Iron Condor is a low risk. It's a low, or sorry, it's a low reward trade. It's a high probability trade, but it's a low reward trade. I'll show you. If I did an Iron Condor on Nvidia, let me take this to, let's just do the 30th. If I just did Friday and I said, you know what, Nvidia is going to have a small move in earnings, it's not going to go anywhere, then let me show you what that looks like. So if I plan around this Nvidia trade through this week, it's a $14 move expected. So what I'll do is I'll say we're only going to go about let's say 18 bucks. So on the 127, if I went to 145 on the call side, I sell the 145 and I buy the 146. You can also make this wider if you want to go 145 by 150. Collect a little bit more income, but now you're risking $5 and only making 70 cents. So you're risking 430. You tighten this up a little bit. Yeah, I make 16 cents, but I'm risking 80 bucks. I mean, it's obviously a backwards rewards risk, but I have an 84% chance of profit on this trade. It's outside the expected move. So if Nvidia just stays as is, kind of stays within the $14 expected move, we can make money on this trade. We're not going to make a lot of money, and if I go 5 contracts, I'm risking, $400, $500 of the trade to make like $1 or less. But 127, how many go? I went $15 up. Is that right? A little bit more than that, like $18 up. So we'll go to 109 there. So I could grab 30 cents, have about a 70% chance of profit, which I don't think is good enough. I'd make $30 to risk $70. It's not a terrible trade if I was comfortable with, okay, I'll risk, let's say I'll risk $500. Well, if I risk $500, I can make $200 on a 9er condor. And all price has to do by Friday is not breach 109 and not breach 145. So that means that if NVIDIA, and I do like this trade, if NVIDIA doesn't go to all-time highs and doesn't just dump to the downside, then we just stick within the probability and the implied volatility, and you just suck out the premium, grab your 30 cents on your condor, and walk away. Like that's not a bad trade for a Wednesday afternoon earnings. You'd have to deal with this on Thursday, Friday only, and then the trade is done. So not a bad trade, just different ways of looking at it. So I'm going to go out a little bit further, use the credit spreads to my advantage to take advantage of time. And Iron Condor does as well, but I have very, very low risk on my side of the trade for $1.50. And I'll see. I mean, even if I get this thing to, let's say it decays down to like $1 debit. If I can make 50 cents in the trade, that's my max profit, right? One side wins, one side loses. That's a max of 50 cents. So realistically, if I walk away with like 25 cents, 30 cents net profit, it's okay. That trade is mechanically, that's probably where I should be taking profit anyway, is like the halfway point.
Hey,
Okay?
Chris, how you doing?
What's up, man? You're gonna sweep me off?
Yeah, unfortunately, we got James coming up next, so we're gonna transition here. Thanks for coming on today. I think I'll
be back Friday.
Right?
I'll be back Friday. I've got a full like trading marathon Tuesday, Wednesday, Thursday, so I'll be back on Friday.
Gotcha. Well, if you guys enjoyed what you saw today from Chris, you can go sub to his YouTube channel down there. He usually comes on every day, but like you just said, he'll be back on Friday this week. But we're not going anywhere. We're going to transition right after this to another big-time regular FOREX James from Elite Traders. So we're going to take a quick break, and then we'll be right back with James.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey guys, how's everyone doing? Let me just share my screen. I forgot to do that before. Okay, there we go. Hope you're all having a good day and had a good weekend. So, yeah, markets are a bit difficult to trade at the moment, in my opinion. We've got the dollar. Obviously had a huge decline recently since I think it was June. So the end of June until present day, the dollar's basically just fallen off a cliff. However, we are seeing support around the 100 to 101 support around here. The next support we could see price at is sort of the $99 to $100 level right around here. So, where's the dollar going? I don't know. From what I've read over the weekend and what I've seen after doing some research, it seems that the 50 basis point rate cut is now priced in. And that's possibly why we're seeing less bearish momentum in the dollar today. But obviously, we'll have to see how this goes throughout the rest of the week. So we kind of had two options from here. It's either up or down, obviously. So if the 50 basis point cut is already priced in, that could lead us to a potentially stronger dollar leading into Fed cuts, or 50 basis points isn't fully priced in yet, and we continue to see a breakdown of the dollar. But up or down, if we could know that, then we'd all be rich. So yeah, interesting to see. The euro is stalling at this level of resistance on the daily time frame. We do have another level of pretty strong resistance up here, sort of at the 1.13, which, you know, should really be keeping an eye on. And the yen is also stalling as we come into the previous resistance level through here, which was formed when we had the outflow of carry trades. So that's a rundown on some of the currencies. Moving on, the dollar NOK. Now, I've been looking at this pair for a long time. However, it's developed a little bit as we have seen a weaker dollar. I do think we are due for a pullback in the dollar now. If we look at a lot of the dollar pairs, so Australian dollar, euro dollar, Australian dollar, pound dollar, and the dollar NOK as well, they're all pretty extended, and a lot of them are at quite major levels of support or resistance. And in this case, we're at quite a strong level of support. However, the moving averages are pretty bearish. We've broken out of this uptrend, or, you know, the supporting trend line. So it wouldn't be necessarily outrageous to say we could now come and create a lower high before we now go, or then go and continue a downtrend. I do think the NOK has a lot of room to gain value sort of into 2025. And obviously with Fed cuts coming, this could be quite a nice trade if we can see a valid pullback, potentially even just to retest this trend line up here. So it's on the watch list, but unfortunately, no execution yet. The NOK SEK is another one I've been looking at quite a lot, and I've been speaking about this one as well. The problem is it's just not ready to buy economically or fundamentally. Actually does seem quite good, which is strange because the price action just isn't showing that. We are continuing this really strong downtrend on the daily time frame. So I am considering going in for a position starter kind of in the middle of this range and see what happens sort of for the rest of the year. And if we do manage to break out, then I can start scaling in. So here, for example, if we break out of this this resistance trend line, then I can add in another position and sort of round off my risk. But at the moment, yeah, it's not looking ideal. The Australian US dollar, again, as I was saying, a lot of the dollar pairs are now at quite strong levels of resistance. So we can see the Australian dollar is no different. The problem is we just aren't seeing much of a pullback yet. I mean, it's only Monday, so maybe we will later in the week. But today it's been pretty flat. You know, we've not seen too much movement. However, the level I was discussing, I think it was last week, so the ING target was at 0.68. And this level has been tapped into. So you can see the ING called this level almost perfectly. And this level was tapped, and we're now seeing rejections. So I'm looking to see if we can get a 50% pullback here. Whether we'll get that or not, I don't know. The moving averages would suggest it's possible, you know, that we're quite far away from the 200 here. So we do have a almost 2% difference between price and 200 moving average, which could signal we are due a pullback. Euro Australian, I'm still watching this one. However, it's, you know, kind of on the sidelines. I'm not too interested in this one because we do have this really quite obvious head and shoulders pattern here. We've got the neckline or the support quite clearly as well at 1.64. Now the issue is we're not breaking below this. The thing is, even if we did break below this level of support, we've still got the daily 200 moving average to help price and act as dynamic support. So it's more a case of I'm just interested to see if we can break rather than I'm waiting for the break to get in, if that makes sense. Yeah, at the moment, there's not enough really there to back up going short yet anyway. No, pound dollar, pound dollar, let's see. Yep, same as Australian dollar, quite a nice level of resistance through here. I guess technically we've actually broken. However, if we can hold above is a different story. Now, again, looking at this 200 daily moving average, we are very far away, which could indicate a pullback. The daily time frame down here on the RSI is also really overbought. So potentially we could be looking for a 50% pullback as always, something along these lines here, and then taking it into the institutional target of 1.35. So the 1.35 has come from bank reports. I'm not saying it's institutional to sound fancy. It is what institutions are targeting by, I think it's the end of the year. However, I think it will happen a bit sooner than then. Gold, I'll go over gold in a minute. I am in gold. So yeah, I'll cover that. James, at what point did you quit your 9 to 5 to focus solely on trading and the financial markets? You know what? I'll be completely transparent. Let me just sort the camera out here. So this is a big misconception in trading, is that trading will replace your 9 to 5 salary. And it more than likely won't. So yeah, you might have a month where you earn more than what your job pays, but it's not stable. So you could have 2 great months and then you have 4 losing months, for example. And it sounds outrageous until it happens. It's like, oh, that wouldn't happen until it does happen. So if you are looking to take trading full time, you need to have another source of income. Which is why you will see a lot of other traders run companies. So, for example, I run Elite Traders. I also have another company outside of the trading industry, and that's just supports me. So, if I've got, if I am on a losing streak, so for example, in July, I made no money from trading because I had some really poor positions on the yen. This month is so far pretty flat, but I'm not sat here stressing. I'm not over trading. I'm not over risking. I'm not scrambling to try and make money to pay bills because I have my other businesses to substitute that. So to answer your question, to take trading full time, you need to have something just to take that pressure off when you are having a bad time. So even if you're making, 3,000 a month on average from trading, you should have something else, maybe that's 2,000 or 5,000, something that can match your trading income, just to, again, relieve that stress from you. So moving on, we have dollar Canadian, and unfortunately, I missed the boat on this. So I was looking to short. I was talking about going short. I think it was possibly up here or maybe a bit lower down here. And I was looking for a pullback into this level. And unfortunately, it, just not happened, but what can you do? So I'm still looking for some sort of entry here. Any sort of pullback would be great, really. The problem is that I'm seeing here is there's not a clear level really to bounce from. I mean, we've got sort of some lows down here, but they're not overly convincing. So for example, with pound dollar and euro dollar, it's a bit more clear that we are at quite a major resistance. So you can draw the fib and say, okay, well, we possibly could come to here. However, with the dollar CAD, the market's a bit more ugly. So we may just be looking at something like this. And that's looking more to a very modest trade, which not very interesting really. So yeah, it's a bit sad. But yeah, definitely looking to get in shorts, but yeah, where, who knows? Did you try in the past? No, I've never used trading as just one income. It's never been an individual thing. So I was trading when I had my full-time job. And then while I was working my full-time job, I was building a business that wasn't involving trading. It was completely different. Then I took that business full-time with trading and then decided to build my Elite Traders on the side as well then. So it's kind of a process of layering my incomes on top of each other rather than going full into one or the other. We have Dow Jones. Now, similar thing with Dow is where are we going to get this pullback? So I think the problem here is the 50% pullback level right here where I normally target is too optimistic. So the moving averages have already trailed above this 50% level, which I use as a sort of guideline. And in this case, if the moving averages are above the 50, then it's less likely to get hit. So I'm not sure, to be perfectly honest, how I will execute this. But I am looking to go long at some point. So Let's see. I mean, we could, I guess, come down a little bit further to this 50% level off the daily. And this would allow, where's my brush here? This would allow the 200 daily moving average to catch up. And maybe we could get in somewhere like this, bouncing off the daily 200. But, you know, that's been very optimistic. That's a very perfect world type situation. And we all know the markets aren't perfect. So, yeah, we'll have to see about that. But yeah, I think we are due a pullback on a lot of pairs. Everything is very extended at the moment. So yeah, it's a case of still trying to trade the trends. It's just a bit of a waiting game at the moment. So last thing on the watch list is pound Australian. I do really like this. You know, I've been saying for probably 2 or 3 months now that I am very bearish on the pound long term. I think the Australian dollar's doing okay. So yeah, I'm looking ideally to get short off this 50% level. In terms of a stop, maybe, you know, you could even be conservative and have a stop above the day, the wick up here at sort of 2.003. Or you could be a bit more aggressive and just put it directly above the immediate highs right here, and target the fib extension. So that's kind of the plan for pound Australian, looking for this slightly deeper pullback to create a lower high on the daily, it would be, to continue the bearish trend. What about yen crosses? Are there any moves in the market that can bring yen cross back to life? We are long on the Swiss yen, but I'm also still long on my dollar yen positions here. And this one's a bit more interesting because this has been messy. This has had me on the edge of my seat for over a month. So I initially entered these positions off the Bank of Japan interventions, then they turned hawkish, then the carry trade unwind. It just all fell apart. Like, it was just one of those trades where I entered, something bad happened. I entered, something bad happened, and then we had this meltdown. However, you know, risk was managed. It's fine. It's more just one of those trades that I can't seem to get out of now. So I am in a position here to bring my average lower to get in, to get out at more of a break even or a profit point at some point around the 155 level. So behind the yen, I think the carry trade's pretty much unwound already. I don't think we'll see much more bearishness driven by unwinding, but what we need to be careful of is a hawkish BOJ. We need to be careful of interventions. We also need to be careful of the Fed. Now, interventions and rate hikes by the BOJ, interventions by MOF and hikes by the BOJ, I don't think will happen for the rest of the year. I think we may get a rate hike by the Bank of Japan next year, maybe in around the second half. So maybe this time next year, so sort of July to August. So yeah, it's mainly what's going to happen to the dollar in this situation rather than the yen. I'm pretty bearish on the yen. You know, if you zoom out and look at the Japanese economy and look at the yen compared to the dollar on a broad basis, it's still pretty, pretty bad, to put it lightly. So yeah, I'm quite happy to stay long dollar yen. However, let me be very clear. I'm not saying to go and buy this. I'm staying long because I'm already long, and I need to get out of my positions. So if you're not in these trades, to be honest, especially dollar yen, I'd be staying away. Australian dollar yen actually doesn't look too bad. Now, again, as I was saying earlier, I quite like the Australian dollar. I don't see really much reason that the Australian dollar is going to lose loads of value, especially compared to the yen. So you can see this blue line up here was my Australian dollar yen entry, and we collapsed, and now we're starting to come back up so I can get out at break even soon, hopefully. But yeah, anyway, sorry, to actually answer your question, I wouldn't be buying any yen pairs at the moment, just to be on the safe side, because although I do still stand bearish on the yen, you know, it's still very undervalued, and anything can happen. And yeah, you know, Bank of Japan and the Ministry of Finance is known for not really giving us a heads up before they start doing stuff. So yeah, what can you do? In July, BOJ hike was 15 basis points. Yeah, exactly, Anton. So their hikes won't be like 50 basis points like the Fed. It might just be 15. However, because of the state of the yen, 15 basis points has a pretty large effect. AUD NZD. Let me just quickly cover gold, because I remember someone asked about that and I said I'd get to it and I didn't. So yeah, I am long gold. So I've got a very similar entry to Nick, actually. So for anyone that's not seen me before, I trade the way Nick and I trade is very, very similar. The only difference is that I rely heavily on fibs, but also for a lot of market structure. So I entered right off this resistance when we tapped into this 50% pullback level. We've seen a really nice rally to the upside, trailed stop loss, and I scaled in actually just before the stream, which seems to be not too great so far. So you can see on this hourly candle here, we had this sort of bullish pin bar. So I entered on the closure of that. And now we seem to be heading to the downside a little bit, but that's okay because the initial position's risk-free, took relatively small risk on the scaled in position. So if that's stopped out, it's not a problem. DXY lower and UJ lower. Monetary policy adjustments by BOJ. Yeah, we'll see about the yen. I think if I wasn't already in my yen positions, I wouldn't be touching the yen at the moment. I think it's a bit of a what do you call it? Yeah, it's just a bit too risky in my book. So let's have a look at the Australian dollar, New Zealand. Yeah, so you can see I was long. And as I said, you know, I keep saying this, I do quite like the Australian dollar. So I was looking to go long off this 50% level and clearly didn't work out. Now, the New Zealand dollar is obviously in double dip recession. So compare that to the Australian dollar, actually doesn't look too bad. So yeah, looking to target up here around the 1.11 level. Just not too happy with where price is, to be honest. I think, you know, the H4 looks quite bearish. The moving average is bearish. The daily is bearish. I mean, actually, I've just noticed the daily is at the 200 moving average here. So maybe if we get a bullish daily candle close off this level today, maybe I'll take a small position tomorrow and target these highs, stop loss. Yeah, stop possibly just around here. Take this at half risk just to be safe. But yeah, overall, I'm not overly happy with it, to be honest. But yeah, we'll see how the daily candle closes. 146 to 143 UJ market sentiment. Well, Anton, I have been reading the bank reports as usual. The sentiment for sort of the next year. So, well, I say year, probably in the next 6 months. It's expected UJ will get back to 155, which is why I've marked it up here. Now, yeah, that's not, you know, that's a very long outlook. So it's not really paying too much attention to what's going on right now. So yeah, I mean, as I said, I've already been sat in these positions for a very long time. I'm happy to wait really and just manage the risk. Obviously, if it the drawdown becomes too much, I can cut off some of the loss and try and average in if I need to. But yeah, it's not really an issue. EuroCAD, been speaking about this one. This is a signal that we've got open actually in the Discord. So EuroCAD is driven predominantly by seasonality, and then we've also got pretty weak Eurozone data, really. Obviously relative, but you know, compared to the CAD, shorts are pretty, you know, what's the word? I can't think of the word. Yeah, shorts make sense on EuroCAD, to be honest. So looking to take this down to 1.46 is the first take profit. Well, actually, sorry, 146 is the second profit level. First profit level is 1.48. Really, I need to see a break of this H4 200 moving average, because you can see we've been in this uptrend for quite some time now, and we are still in an uptrend technically. So yeah, really, I just want to see price start to break down, like something along these lines. But yeah, this is more of a position trade, so happy to sit this one through and just let it run. Euro NOK. Now I am in Euro NOK, but it wasn't a signal. This one was just more of a side trade. However, I think I may need to close this one at a minor loss, to be honest, because it's just not looking too great. I entered off this bearish engulfing candle, and since then it's just sort of, you know, drifted to the upside. We did come back down to entry on market open last night. However, obviously very quickly was corrected. So yeah, it's a bit of a messy trade actually. But yeah, I don't think there's much else for me to cover, to be honest. Covered the watch list. Yeah, I've not done my usual, what's it called? My usual research document, because I was waiting on some things and I was pretty busy over the weekend as well. So I'm not sure when I'm next on. It might be tomorrow or later in the week. So I'll bring the research document on once I've updated it. I can give you guys a more of an outlook according to the institutions and things. But yeah, I think this is me done for today. Unless there's any final questions. But yeah, I think in terms of charts, I've gone over everything I have at the moment anyway. So yeah, guys, thank you for having me as always. You've been great. I appreciate it. And I will see you later in the week at some point. So have a good night. See you later.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.